Back in the early part of 2010, what did we imagine our futures to be like? Was it as basic as having kids, a house to call our own? Or even was it something a bit more futuristic like this? One thing we didn't count on was sky-high interest rates and mortgages, even rents increasing at an incredibly great rate. So in the UK, they've grown at their fastest rate in the past 8 years, growing at a rate of 5.1%. If you're watching this from the US, the average rent price is actually 1.8% less than it was last year for yourselves. Again, rent prices are very slowly growing in the US, but it's a lot more moderate. In the UK, owning a home is seen as a symbol of security. It's seen as a symbol of financial stability. Renting is seen as dead money. In the US, it's seen as the American dream to own a home, but is it really worth it? Or are we just chasing the image of being successful, of having growth in our lives? Let's cover the pros and cons of each to help you decide. And if you stick around to the end of the video, I may have something at the end to help you decide here and now if you really are stuck between the two. If you like this type of content where I cover all things money, one day even property, please be sure to like and subscribe. Now, getting started with renting. So renting is essentially where you pay installments to a landlord or a homeowner in order to continue living there. So this can include furniture, so it can come furnished or unfurnished, and it can include some utilities as well. So sometimes they'll include water in the rent or internet. But you pay for the price of convenience, so obviously that does affect the rental price. The first benefit being the short-term costs. So I think both in the US and the UK, it's a 1 month deposit they ask for. So whatever the rent is that they're asking of you, usually on average, it's about a month they ask for in terms of a deposit. Obviously that works out a lot cheaper than if you were looking to buy a property. The only other cost is more sort of if you're in the US, but that's renter's insurance, which you've got to consider. The next benefit is the fixed costs. So at least every single month, you're going to know exactly what your rent payment's going to be. So if there are any unexpected costs with the property, obviously it's down to the homeowner or the landlord to look after it. The third benefit is flexibility. So in terms of flexibility, you can move or relocate whenever you want to. So if you do want to change a job, or you do want to move, or you want to travel, renting is a lot more flexible than it is being an owner. It's just a matter of obviously being aware of what your landlord expects, what's in your agreement as to how much notice you have to give. Sort of the other side of things with flexibility is it does mean that you can potentially rent in an area that you wouldn't be able to afford to buy in. The final benefit is ease of living. So obviously when you rent a place, it's going to be a lot easier to live there because the landlord's responsible for it. So any repairs that come up, any service charges, it's simply you pay the rent every single month and they'll look after the property. So it just means in general it'll be a lot less sort of stressful living there because you just have to report issues to your landlord. And now for some of the downsides of renting. So I think the first and most obvious one is you can't build your own equity. So when you own a home, every payment you make towards the home, you own a little bit more of it. Obviously with renting, this isn't the case. The other side of things is if you, let's say, paint the walls or do up the windowsills as an example, it's the landlord that benefits in the increased value. It looks nicer for you, but obviously it's them who benefit from you spending money. The other side of things is the capital appreciation as well. So over time, naturally, the value of a house is going to slowly increase. Obviously, it's the landlord that benefits, not you. The next downside is customization. So when you're renting a place, some places you can be limited in what customization you're doing. So let's say painting walls a certain color, which means that you can sometimes never make a home fully your own when you're living there, even if it is rented. The next drawback is security. So when you're living there, landlords can increase rents essentially when they want. Obviously, they'll have notice periods and legislation to make sure you're well informed of that, but they can increase their rent. At the end of the tenancy, they can also ask you to leave, so you can get very comfortable there and stable, but they can simply ask you to leave at the end of the tenancy. The final one is restrictions. So again, this is as simple as if you have pets, not allowing pets to live there, or again, just restrictions with what you can customize, update and change sort of around the house to make you a bit more comfortable living there. Again, certain colors in terms of painting the walls. And now to cover owning a property. This is simply the process of viewing, carrying out checks, surveys, the legal side, setting up a mortgage if you need it, and making payments every single month to own a property that's in your name and maintaining it as well. So the first benefit with that is building equity. So every single month that you pay towards your mortgage, you own a little bit more of that property. You've got the benefit of capital appreciation. So if you buy a house for, let's say, £250,000 and it goes up to 260,000, 270,000 over a few years, then you benefit from getting that extra equity back. On the other side of it, if you carry out any renovations or do anything to the house to increase its value, so let's just say you build a utility room, which ups the value, again, that's something that you can benefit from as well. The other side of things is the flexibility in how you use it, what you do with it, with customization. Again, sort of compared to renting, you can do whatever you want to really make it your own home. You can, let's say, use a room for a home office, which certain agreements might not allow you to do, or run a business from home. Renting out a room on, let's say, Airbnb. Again, I'd say check all your sort of your mortgage paperwork and that side of things just to cover yourself. But yeah, a lot more customization with what you do and how you use your home. Another benefit is the security. You own your home. You're in perfect control of exactly what happens when you're living there, when you want to move, what happens with your mortgage. Last benefit applies to the US, where you have the ability to deduct the actual mortgage interest or the property taxes from your tax return, but I'd speak to an accountant about all of that. So now for the negatives of owning a home. It's obviously higher in terms of your transaction cost, your money that you have to put out to actually own it. In general, you have things like your house deposit, which can be anything from 5% to 25% to the value of the property. Again, that can vary. It can be higher, lower than that. It depends on the value of the property and you as a person. But you'll have solicitors' fees, you'll have surveys, checks, you'll have potentially stamp duty, property taxes in the US. There's a lot of costs that go into it, which do make it quite a bit more expensive than renting a home. Another negative is the risk. So it's not to say property is guaranteed to go up. There's the risk the value can go down, so you'll be in negative equity, so you may lose some money. There's also the risk of interest rates going up and mortgage prices going up, so that's something that has to be considered. Another drawback is with owning a property, it can sometimes be inflexible. So you may not be able to sell when you want for the price you want. You may put the house on the market for what you think is a reasonable price, but it might take longer than you expect for it to sell, and the legal process behind it, and also the price as well. It might not be for the price you want. The other side of things is if you have a joint mortgage with someone else, let's just say if you were to separate, the legal process can even be tougher from there as well. The final drawback is you're responsible for repairs. So if something was to break or wasn't working properly, it would be down to you to get fixed and pay for. And now for that juicy bonus bit. If my entire video has left you like, this is the 5% rule, which I'm going to simplify a lot to keep this to the point. But when you're comparing rent versus a mortgage, you can't compare them side by side, because with rent, when you pay it, all your money is essentially gone. With a mortgage, when you pay it, some of the mortgage goes towards your principal, so how much you own the home. Some of it goes towards interest, so that money's essentially gone. There's a lot of costs that go into it, so you can't compare directly, let's say, a £1,200 rental property to a £1,200 mortgage. Now, the 5% rule looks at the unrecoverable costs. So for rent, the unrecoverable costs, so the money you're never going to see again, is all of it, other than your deposit, really. With your owning a home, that's where it gets a little bit more complex. So with the 5% rule, it looks at three main areas. The first one is your property taxes. So in the US, that's quite straightforward. If you're looking at the UK, this is your costs that you aren't going to get back. So that's your broker's fees, surveys, stamp duty, solicitor's fees. But this is considered to be 1% of the property's value. The next area is the maintenance expenses. So the cost to maintain the current value of the property, which again is seen as 1% of the value. The final bit is the cost of capital. Now that's where it gets quite complex with the rule, but the cost of capital is the cost to borrow the money, kind of weighed up against the opportunity cost of if you would have took that same money and invested it in the stock market, as to how much would we have missed out. A lot of math and magic happens, but the 5% rule factors in a lot of things, everything from capital appreciation, the value of the house going up, it factors in inflation, it factors in the interest we pay actually for the mortgage to own the house. So what this gives you is 1% of your property taxes or your costs, 1% for your maintenance expenses, and 3.5% for your cost of capital. I know this gives you 5.5%, but 5% is a lot more catch into the year. But there are a lot of resources out there if you do want to understand the rule in a little bit more detail. So what you do is, if you take your home value now, whatever the value is of the home you're looking at, times it by 0.055, that gives you sort of your 5%, and then divide it by 12, and that will give you a number. That is the way you compare the cost to own that property against the rent. But it is, again, a heavy simplification. So if anything, it should just be used as a tool to help you understand it a little bit more and maybe do a bit more digging. Now let's change up the camera angle a little bit for this portion of the video, which is a shame because this isn't really my good side. Anyway, so we have got this £230,000 property. See, it's very nice, looks modern, driveway, look at that, nice kitchen, oh, conservatory, very nice. Anyway, going through it, if we take our £230,000 and we multiply it by 0.055, this gives us a figure of £12,650. If we divide that figure by 12 to give us sort of a monthly breakdown, that comes to £1,054. So this £1,054, that is our comparison to compare to the rent. Now let's say this house rents for £1,275, which I've been told is the sort of market rent for that area. Now if it rents for 1,275, this is 1,054 based on this math, then you know buying is a financially responsible decision. If you're still unsure and need to do some more digging, I've included a couple of links in the description for some online calculators which really go through things on a more personalised and tailored level for your needs. One of which is absolutely brilliant, and it actually explains all the numbers and the conclusions it comes to. But just remember, I'm not a financial advisor. If you're unsure of anything, I'd recommend speaking to a professional if you really are unsure, and just make sure you carry out your decisions based on your own research. I think in the decision to rent or buy, it's very much down to your personal circumstances. What are your plans for the future? What are your financial plans? Owning is a much more viable option if you want to stay, you want to plant your roots, you're ready for the costs that come with home ownership, but also the benefits that come with building equity. I think in general it's said that if you want to live somewhere for longer than 5 to 10 years, usually it is sort of the better option to buy. From a renting perspective, it's a budget-friendly alternative, ideal for people if you're expecting a change in locations or a change in circumstances. But what I want to say is there's exceptions to all, just everything that we've covered. Let's just say you may be in a place where financially you can own a property, but you prefer to rent just because you don't have the stresses to repair, maintain, look after it. On another hand, you might expect to live somewhere for a couple of years. You go through the process of buying it, but while you go around and travel, let's say, you rent out that property. So there's exceptions to all the rules. But I wanted to say thank you so much for watching, particularly if you made it to the end. Hopefully I've shared some insight and really helped you towards making that decision. But if I have, be sure to like and subscribe for more incredible content like this. I'm a very young channel, so every like and subscriber means the absolute world to me. But thank you again, and I will see you next time.